All right, so we got a few answers to a couple of questions we last went over on Thursday, right? Let me think. Last Thursday was before Jackson Hole. Yeah, right. I got again. I know there are a lot of members on here, but this is the Thursday webinar, uh, so yeah, okay. So good. All right. And I'll try not to sound too repetitive for those who are members. I'm going to spend most of the time on what stuff we learned this week. All right. So we'll talk about quickly where we were last webinar, what we were talking about, and where we are now. Okay. Again, going into even without Jackson Hole, right? The rally that we were witnessing off the lows. Okay, and I had a tendency to refer to it even, as a bear market rally, even without the concrete proof that it was a bear market rally and not the start of it. But as the rally moved on, and even when the rally rolled over, we just weren't seeing the things you would normally see at the start of a new bull market. Okay. And if you remember, we were talking about how we got to get away from that phrase, are the lows in, because it can really confuse the whole big picture of what's going on here. Okay. Because again, it's not that cut and dry. Are the lows in? They may be in for a couple weeks, may be in for a couple months, right? I mean, does that mean they're not going to be in? At the end of the year, we can't breach new lows and have another leg down. So for me, it's more about, is it the start of a new bull market than if it's quote unquote, are the lows in, okay? And the stuff we normally see when a new bull market is starting to form, and again, the price action means nothing, okay? Because to me, it's even better if the price action's really not doing much and we see those characteristics we were talking about, right? Underneath the hood, individual names getting the attention, new names, new setups, new leaders, not the same names especially that are down 80% off the highs and everybody's still trying to pick a low in, right? It's almost hidden in a sense, and that's how it starts. Okay, then as it goes on, it becomes more obvious, right? So we weren't seeing any of that. If anything, the only thing we were seeing, okay, as far as anything constructive, was some of the familiar commodity / energy names, and more commodities, more energy than I would say commodities. It was a very select few commodity related names. The bulk of them were energy names at the time. But that's where all the real buying was. Okay. Everything else, and still to this day, okay, the majority of the flow is more speculative in nature. Okay. In other words, it resembles how we would approach the option market if we were looking to get in, get out, ride the momentum type of thing, as opposed to bet on the underlying, right? Whatever company those options are trading in. Okay. So we were seeing a lot of more speculative action. The only real action was in a lot of those energy names. And if you remember, a lot of those energy names, okay, especially going into Jackson Hole, the end of last week into this week, they really had nice moves, right? They've been a leadership group already. They've been outperforming. They finally had a breather or correction, right? You guys all know this name, Oxy, and one of the newer ones like a Vet, right? So they have held up even when the market was pulling back, but they had a nice breather. The majority of them had nice breathers, especially like nat gas names like an AR, right? Nice breather. And they got bought where they needed to get fine buying, right? But going into late last week, you've had some healthy moves in these things where it'd be totally normal for these things to cool off a little bit, So it was a good test while these things needed to cool off, okay, to see if there was any interest in any other spots out there, okay? And it was perfect timing as well, because you had a bear market, again, here I go, but now we could call it a bear market rally at this point, even if it leads to something more. I think that rally we witnessed off the lows was a bear market rally driven by offsides positioning more than anything else, okay? But this was going to be the real test, right? You had Powell come out, he put his foot down, tried to reset the market, saying, listen, we're not cutting rates, get it out of your head, blah, 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 blah. And it was a good test to see if this market had anything real behind it, because there would finally be a true test, a gut check in a sense, where there'd be some weakness, right? And that's what we saw coming out of Jackson Hole, right? And this is what we saw. Now, ironically, and we went over this stuff last week, okay, we are the equivalent, again, we were compared to the last bear market rally right here. Remember how we were talking about it? Okay, we are right here, right now, literally. Downside niner, found some support, give or take, right here we are. Okay, and then this should have not happened, right? This shouldn't have happened. Okay, and even more so, if you guys keep remembering, because I was using this, I've been using this example back then, because it cost me money, right? I actually started a position back there trying to front run this being something more than more selling, okay? We needed to see that real sweeper activity, that buying show up, that constructive price activity under the hood in individual names. It needed to happen here, okay? This is where it needed to happen. Again, this got overextended, cooked, right? This is totally normal to see a breather. We got a nice breather in the downside niner. Now, if there was going to be any buying that comes in, it would have to come in here. And it did not. The total opposite happened, where we saw put sweepers get extremely aggressive, really pick up the pace, and the price action looked like dog poop, right? You can see boom, 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 3 days really put a dagger into whatever we were looking for, right? So we're kind of at a similar spot here. We should, now tomorrow, we got a little wild card here in the job number, but at the least, we should find a little support here. We really should. At the least, something like this, at the least, right? One, the obvious, right? We're a little overextended to the downside. Okay, that's the obvious. You got, again, the downside niner tells it all right here. Exhaustion signal, where we should see sellers get a little tired here. Okay. But again, for us, like, for it to be anything more than just a quick trade and stuff that we want to take advantage of over the extreme short term, and we've gone over this, more than likely even just intraday, because is it even worth it to do anything beyond that? We want to see something different. And let me tell you something. Okay, and it could start now, but what we've been seeing up until this point in this downdraft is the exact opposite of what we want to see. It's disgusting. Okay, all the good-looking activity has been put side, right? We see bombs going off put side, some good-looking put action. All right, fine, whatever. That's fine. We've rallied significantly. We needed to cool off. Okay, we'll take it. But at some point here, the buying has to show up, and all the things, again, I don't want to rattle them off, but you guys know what I'm talking about. Credit spreads shouldn't blow out, right? Financial conditions shouldn't aggressively tighten, because if all that stuff occurs, it doesn't matter what any of us think. You understand? It's going to weigh on risk assets and the price action. And that's something we really don't want to get in the middle of. You know, again, outside of being extremely tactical and just trading, you understand? And, you know, we automatically go to that because that's what a lot of us, like, that's the main goal here, right? A lot of us want to know when the risk reward not only becomes favorable, but where we can start really looking, really start looking to do some buying and some shopping, and not be concerned that there's another trap door underneath us. That's like the main goal here, right? And until we see some early signs of that, we just want to trade. We just want to really be extremely nimble, okay? And we don't want to get caught holding the bag. Where the opposite of that is when things line up and you start to see those constructive signs, you don't mind being early and holding the bag a little bit, because you're making a bet that when the turn comes, it's going to be well worth it. You understand? No matter at what point that you're early, it's still going to be worth it. All right. There's nothing right now to come to that conclusion. Not a thing that I see. Not a thing. Okay. So if that's the case, we want, like I said, we want to be extremely nimble. But here's the thing too, and let's talk about it before it really pops up, because we're almost there. Okay. We can get to another point like this. Okay. And I want to have this conversation on the early side here, because when you wait till the last minute, it's hard enough, right? We could get another situation where we get to a setup like we had here. Okay. And when we get that setup, as crazy as it's going to sound, we just went through it. Can you believe we're going to have the same exact questions and concern that we had into this setup, and why we didn't know if it was worth taking or not? Can you guys freaking believe it? And right after seeing a rally like this, and the Fed taking their foot off the brake in a sense, we might run into the same exact setup again here. Okay, what I mean by that is we're going to be faced with the question, okay, this level should hold. Okay, there should be some support here where the level should hold, but what's the upside? Right? What's the upside? Because once again, like over here, the Fed did it again here, right? I know quite a few of us thought at best it would happen over here, right? Right? This was like best case scenario. Well, I thought definitely. I know a couple of you guys agreed with me, right? We thought best case scenario was here. Okay, we were a little wrong. It went to here. This was definitely worth taking, without a doubt. It was definitely worth playing now that we saw what happened. But keep in mind, the Fed got out of the way of it. And then, or you could say the market even ignored a lot of it until Powell came out here, right? Right, the Fed was on the 200-day. That's hysterical. But I mean, that's basically, you're right. That's basically where it went to, like a magnet. I didn't think, I'm being honest, Ranchero, I did not, if I thought it was a lock to go to the 200-day, I would have definitely had swing exposure on down here. Even though knowing that I was going to trade it, and even knowing that this was more than likely going to be a bear market rally, I would have played it. But I wasn't sold on that. I wasn't sold on that. I was worried about something a little more than this squeeze. I thought it would last longer, but I was concerned about the upside. You understand? Like, I wasn't worried about the lows breaking. You guys remember, I felt like the lows would hold for a while, but the upside, I was unsure about. You understand? So, but where we are right now, okay, just like then, I got deja vu. This is exactly what you want to see. Exactly what you wanted to see. Okay? You wanted to see this. Bull, bear, whatever you are, this is exactly what you wanted to see. Now, the question that is here, the most important question is it this again? Okay. Is it something bigger? Or I got news for you. Okay. It may not be any of the two, right? Everybody's focusing on one or the other, and it could be what we spoke about, just a whole bunch of bullshit where these things just we dance around here while everybody's looking for the start of a new bull market or capitulation. You understand? It could very easily be that. Listen, me personally, okay, I either hope like this is the start, like in other words, you get higher lows and we see real buying there. So I feel like it's the start of something bigger or capitulation. But I got a feeling it could be just bullshit, you know? Yeah, I saw that. Kathy finally, I don't know if I would call that capitulation, but finally some outflows, right, T? Now, let me ask you a question. You're telling me that's not the first round of outflows ever, is it? No. Oh, the largest. I mean, how did it take so long, right? It took so long. Now, guys, okay, and I know it looks so far away. And I agree with whoever mentioned that. I think it's going to be I really see a choppy, volatile. I see a lot of, I'm really leaning towards the nothing side, where it's not the start of a new bull market. Things don't roll over and just get buried. And it's just a whole lot of trading in between, a whole lot of, oh, okay. So I agree with that. But, all right, as far as big picture is concerned, and I saw somebody mention that, they want to see capitulation, they get away for it. It can take, look, it takes a while, especially when people are looking for it. It takes a while. And what T just spoke about in regards to the ARC funds, right? You see how long that freaking took. I'm telling you, we're going to see what we were talking about in fund flow before this is all said and done. Okay. I'm the God's honest truth. I don't know if it's going to come at lower levels than the low, right? That's the probability is it usually does. Okay. But not a given. All right. I don't know if that comes at lower lows because of time, but before the start of a new bull market, we're going to see that capitulation, the real capitulation. I gotta believe. I don't think like everybody talks about the Fed pivot like it's a Fed put. It's nowhere near it. We spoke about that, right? And to get that Fed put back in play, trust me, there are going to be people puking out those fund flows, puking. When did those fund flows get? Just recently, Eric, all last year, from mid to end of last year, Eric. From mid to end of last year is where they really took off. No, they've been pegged there this year. In other words, 2022, they've been stuck up there. But 2021, the mid 2021 is when they accelerated up there. Yeah. And the bond, and again, we went over those points the last couple of weeks. There is capitulation in other spots out there, right? Like the bond market had a form of capitulation. Like you want to see, look at this, man. Dang it. Do I have it? I don't even know if I have it handy. But you got to see the difference in fund flow between us and like Europe. You guys see that? The difference in fund flow? It's like an upside down chart. They're puking out of funds in Europe. Okay. And here it's kind of like they rotated into the States, basically. So when shit hits the fan, you get that capitulation. It just, it takes time. And we have time. again, we're not seeing anything that bad in the economy, you know? We're not seeing anything that bad yet in the economy. Where it's actually you saw like the economic surprise index, it's been lifting. So you've been seeing improvement in the economy in spots. Yeah, the Fed, listen, here's the picture perfect scenario, okay, for the Fed. All right, you hear that soft landing that's never been done before. Okay, can it happen? There's always a first for everything, right? Especially when people don't expect it. You know, I really don't see it myself, but it's certainly possible. Okay, and that would be a continuation of what we have here. Okay, even if the lows can hold, but you get a continuation of exactly this menagerie. Rallies are capped, right? Then you come down, all it does is soak up time, and you get inflation cools off in a pretty decent way. Here's the kicker though. How much can inflation really cool over a short amount of time? It's not possible, is it? It can cool, but it can only cool so much, right? Yeah, so that's the problem, Tate. That's the problem. You know, that's the problem, because if it does remain sticky, the Fed is going to remain sticky. You understand? And what they're talking about, okay, recently, and why the market acted like it was more concerned and we saw financial conditions tighten up, what they just mentioned is the worst case scenario for us, guys. Okay, they talked about lifting rates and maybe eventually pausing, but keeping them there. You understand? But keeping them there for an extended period of time. That's not what we want. That's a debacle. That's more of this shit. Well, excuse my French. What we want is let them raise aggressively, break something, and then start cutting. That's what we want as players in this game. What they mentioned they want to do is the worst case scenario for us. Oh, sorry, I don't know what language. Yiddish. You know what I mean? They're talking about the upside down hockey stick. And what that likely means for equities is the hockey stick. You understand? You want something to go through the windshield when they raise, right? You want something to break, and then they got to flip-flop and go to cutting, right? Yeah. So listen, that you took the good news, what I was going to say, the good news, what the good news is out of my mouth. Okay. The good news is forget what the Fed wants, forget what the Fed says. Okay. The market is going to get the Fed to do what it wants. You understand? And it could be where we're at now. If the market doesn't want the Fed to do QT, okay, it's going to throw a tantrum here until it gets that done. You understand? It's going to freeze up the credit markets. They're going to like a little kid. They're going to fall to the floor. They're going to slam their hands and head up against the floor until they get the Fed's attention. And then eventually the Fed will listen, have no choice, and do what the market tells them. The market guides the Fed. That's what ends up happening all the time. That's what happened in late 2018. That's what happens in any other situation. Always. There's nothing different about that. Okay. So the Powell can say what he wants. All the other Fed members can say what they want to do. Okay. And it probably, fed into the selling, but eventually the market, when it wants its way, or Nancy wants its way, it's going to get what it wants. It's going to get what it wants. So we don't forget what all that stuff, what the Fed is saying and all. All right. But in regards to sentiment positioning where we're at now, so you guys get an idea, okay? Here we had picture perfect backdrop for at the least the lows holding, right? You guys remember that. What is missing here? Okay, what's missing here is a lot of the retail trader side and investor side bearishness. Okay, so here's what I mean. You have hedge funds, right? They were short here, remember? They're shorting again. They've been shorting into this. They covered a little recently, but they started shorting into this, okay? CTAs are shorting into this, okay? So the professional side, they're doing their thing again. They've been the biggest bears out there, right? They're starting to get bearish again. What's missing is a lot of the retail trader and retail investor, AAII, fear, greed. Those measure retail investor sentiment, right? Again, look at them as a whole more than individually. Panic euphoria model, again, another investor sentiment. That stuff, that is not at bearish extreme like it was into these lows here, okay? It may not be long, okay? It may not be long, and if it does happen, you're gonna have another situation like we had here. And again, it's up to all of us to decide if it's worth, or, I'm sure it's worth something, but what it's worth as far as placing a bet on a potential rally, right? And how much of a rally. That's gonna be the tough call. If it does work, the tough call is going to be how much, especially coming off this, how much of a rally are we looking for? Yeah, Ashley, big jump in AAII this week because that was getting a little too bullish. Fear, greed was, I think, has been coming in nicely. I don't think I have it updated here, but look, like some of these things, I'll go quickly. And then we can look at, I gotta move this coffee. How is the coffee right there? That's a disaster waiting to happen. Hold on. Okay. Or let me do panic euphoria. That's a cool one too. So you see like this here, right? A lot of these indicators, in the retail trader / investor, you had, bounce back to neutralish for the most part on average, right? So now what you're going to start to see is these things. You're definitely going to see it because we see it in the up-to-date info we get. There was JP Morgan note this morning on retail. They're already showing some bearishness. So you're going to start to see these things come in each and every day. Okay. So that was the difference. Again, that setup that we just had the bear market rally off of, you had all these things bearish, all of them. Yeah, fear, greed, AAI, all of them. CTAs have been shorting too. I added that here. So here's the stuff I brought on here for you guys to look at. All right. So you could see here, look, CTAs covered, right? Some of their short position. And guys, you guys think this doesn't look like much? I'm sure you heard the numbers. If you're members, if you read any of those notes, you know the numbers. You're talking about, what was it, 100 billion or something? Big money in that short covering. Big money into this rally. A lot of people I talk to think that rally was all systematic funds that pushed it. Big money, right? So you guys know, like coming into this week, right? What did we talk about on Sunday? We lost all of that. 146 billion. Ashley, you're right on the money. I gotta put you in my pocket and take you around. 146 billion. That's big money. Yeah, exactly. All right. So coming into this week, we had, we came off from a decent amount of money coming into the market to not favorable at all, right? It was more skewed to the downside. And that's what's been feeding into the selling. All right. We'll see come next week and everybody's back from the holiday, how things look. Maybe there'll be, I'm sure there'll be a better setup, but maybe it'll be a nice one. So that's what CTAs look like. Here's hedge funds. Yeah. Look at this. So they actually started covering here. So you're going to see this in the price action. You see how they added shorts, right? And CTAs have been shorting. That's going to weigh on the price action as they do it. But now you can see they're starting to cover. So you can see more days like today over the extreme short term. You can see days where we're down and it looks like we are ready to roll over and break. And you're going to see these gradual squeezes just off them covering. So you're going to see it in the price action. So this is hedge funds. And, this is what we've been focusing on forever. The credit default swaps. We had this nice downtrend, right? We were talking about. And now you kind of broke this downtrend. We still have, for bulls, you still have a chance here. You still have a chance for that double top. You know what I mean? And then it stays in a range, and that'll likely mean we're doing technicals on CBS, for Christ's sake. That'll mean the lows should hold, and you'll see it here too. This is Hartnett. Like we're looking at this, Hartnett Abova. If you guys remember, he's looking at this, right? The 10-year. So he thinks easy math. 10-year, you get a double top type thing here and doesn't break new highs, you could get the lows holding and play off that, right? So play for a range-bound market, and that'll be your floor, the lows, So that's Hartnett's ceiling. But obviously, you get loose to the upside here, we got headaches, And if you get loose to the upside here, you're going to get loose to the upside here, and you got bigger headaches. Yeah, and Sal, that's, I think, he's saying 39, right? So this is the 10-year yield, Ashley. Okay, this is the yield on the 10-year, right? So 3.26. Okay, the highs, what is it, around 350? Yeah, almost 348. So what he's saying is, for the fall that we're going into, that's his main indicator, whether the lows hold or not, is whether this high holds. You understand? If you could get a double top situation where this thing can't break out, you'll go through a couple months here where the lows will hold. He thinks eventually they break anyway, right, Ashley? But he thinks they can hold through the fall. Yeah. So kind of on the same page. Like, again, I look at, I'm not a big yield or treasury guy. I look at the spreads and default swaps, but they move pretty much very similar, right? So same thing, like you do not want to see a breakout here. Like if we do get a breakout, like Ani pointed out last week on the webinar, you want to see a big explosion, because then the Fed will cut rates. You understand? Something broke. So if you're going to get a breakout, make sure it's big. Mike Wilson thinks we're going to new lows. Mike Wilson thinks we're going to new lows because of earnings. And we're starting to see that, right? You see, like software, it's going to be tricky, guys. It's going to be really, really tricky. That's why you like, for me, the individual names tell me everything. You understand? I know I sound like a broken record, but until I see that quality buying showing up in new leaders, the lack of that is telling me that it's not a healthy bull market forming. Okay, doesn't mean there's got to be a travesty where we're vomiting lower every day, right? We don't have to be in liquidation mode, but it's a market where you want to, again, I'm going to use that T word, but focus on being really tactical and nimble, and if you want to start putting names, you want to start putting individual names away that you think are cheap, make sure, do it in increments, leave some room just in case they go lower, or, put on some form of protection. You know what I mean? That sort of thing. But you want to take it nice and easy when you're not seeing the signs of health out there. Like right now, right? Like flow wise, if it's not energy, right, which is not a new story, it's been all year. There's really, I don't see anything potentially being a leader here. I don't see any signs of any of that. Where? Nowhere. You know what I mean? Nowhere. Like, I don't even see early signs of that. And sometimes they're early. No. And you can get individual name stories, plays, like we've been saying. Okay. And those are fine. But just understand, there's risk. Like what I mean by that is, what's this face? Pins, right? Like there's been some decent flow in pins. All right. But like when those stocks, when rates are, like let's say the 10-year yield that we're looking at, right? You get some acceleration to the upside in rates, pins is going to get sold. The algos are going to sell all those things. Now, it may lead to buyers, right? There's interest in the name, but you can't expect that to go up on days like that. You understand? So you're playing that looking for news. It's like a story stock. It's on an island by itself, but there's risk because of the market. There's risk. There's nothing better than when the group is in play and is showing signs of leadership, and you're picking, the names that have the best action in it to outperform. Like you got the wind at your back. You understand? Yeah, it's relying, like the pins is a little different. You got Elliott involved. You know what I mean? So it's not totally relying on the chatter. But another good example was a name we talked about on here. Again, I keep forgetting the name every time we talk about it. But there was a software name that was seeing action. Bravo was involved, right? Then the software stocks would get hit. That stock would go down. Sweepers would buy, not ZS, the other one, no, they're in this bear market. Zen, thank you, Zen. Like if you traded it, you could have made money. You had to really be, crafty, but you saw it like that's the risk, right? That's the risk. Like, look at it. You know what I mean? That's the risk. Now, again, there are trades there, but the wind is against you. If these stocks, if rates go higher and algos are gonna sell the shit out of these things, because rates are going higher, you got to catch news. If you don't catch news, it's going lower. You understand why? Because you own it. It's not. It doesn't work that way. Yeah, P. So there's risk in these names. I would still, in this environment, I would still look to trade them, then rely on the news. You know what I mean? Rely on catching news. You could play the momentum in these things, because you get that, you buy them, you see some chatter, you get an out, and you can make some money. But it's just, I'm not seeing the health, those characteristics I'm telling you, right? Like Matt said, new names, new leaders, new setup. I'm just not seeing it, right? What we see in energy, okay, look, we're seeing it, we are seeing it, so you guys can use it as an example. We're just not seeing it, and we're in enough spots and where we want to see it, okay? They're buying this, right? You see the commitment behind it? Like that's what they're buying, right? Recently, CCJ, right? We spoke about it. They tattooed it, okay? For whatever reason, I don't know, uranium, I don't know what the hell's going on, but they're buying CCJ, okay? That's one stock. Again, it's a commodity name. It's not a growth name, right? It's not a cyclical name betting on a better economy. You understand? So this is where the money we want to follow, this is where they're going. You know, at late last year, at the start of this year, they were buying in droves, right? All these energy, Alcoa, remember this? All these names getting littered. Now it's a select group, right? A few energy names, a few, CCJ1 uranium name. It's very selective. It's very selective. So that's why we need new names, because that will give us a heads up on the health of a potential start of a new bull market or opportunities under the hood. You'll start to see constructive price action. Yeah, it's just really messy, Eric. I look at the flow like today. Okay, I'll be honest with you guys. Today, was usually this is like an ideal setup intraday for me. Okay, you got tactical sentiment on bullish signal. All right, you had put the calls elevated. So I come into today, I'm talking about intraday only, right? And you guys know, we went over this. I look at this, right? Okay, I'm looking at this here. And what I look for, so you guys know, and again, just this environment, okay? This is giving me an idea of financial conditions and what credit spreads may be doing out there, okay? If this is going south, okay, it's telling me that conditions are tightening up. I don't want to be long. I don't care what anybody has to say. I don't want to be long into this, okay? I don't want to be long anything risk on into this, okay? So what I look for is this, okay? Bottoms out, and now this starts to head up, okay? This is ideal for me intraday, okay? So when I see this, like for example, today, this set up perfect for me, perfect. Market selling, conditions were tightening and then stopped tightening and started to loosen. The problem for me to really get aggressive in any way, right? And even try to ride this thing, this made it into the bell. I mean, this was a beautiful trade if you caught it right, okay? The flow was abysmal today. You know what I mean? It was disgusting today. It was disgusting. I couldn't, there weren't even any individual names for me. Well, you know what I mean? Like Amazon's catching call buying, then there's protection a half hour later. Some names are catching calls and puts at the same time. Right. SPY, they're bombing October puts today and yesterday. You saw those SPY puts yesterday? Was it yesterday, Sal? Yesterday, right? Those bombs that went off? Yeah, the flow is just awful. It's awful. Otherwise, this was ideal. Okay. Now, even if it's speculative flow, even if they're buying SPY same day expiration, weekly expiration, and they're buying Meta, and they're buying pins, and they're buying Amazon and Tesla, and you know what I'm talking about. They get aggressive and buy weeklies across the board, and it's all bullish flow. Okay, then I can get in the middle of this and just own maybe a couple names and own some market exposure, raise my stop, and ride this out. You know what I mean? Ride this out. And keep an eye and see when conditions stop loosening. And then I can say to myself, all right, I'll pull the plug, because I got the wind at my back. But it wasn't anything near that today. I don't know what went on. Every call buyer, there was one order every half hour. It was surrounded by a couple of put sweepers who were 5 times the size. It's just not, it's not bullish activity, man. It's not bullish activity. It's not the big boys playing risk on. It's just not. This would have been a real nice trade to ride out, having the wind at your back. Look at this, right? So you see this here? That's what I showed you before. During this period, this is where financial, what we look at started to loosen aggressively. And then just pull the market higher with it. And it's almost like the wind took it. Oh yeah, it does. She hit the nail on the head. The big boys probably aren't even around right now, right? They put on a couple hedges and they're not even around this week. It's all junk. It's all junk right now. Yeah, they're all out here. They're all right. They all get their last shot on the boats and do their thing. And then no one's around, T. No, they're all out here. No one is around. No one's around. You know, no one's around. Again, I'm sure they can still put in trades if they need to, but yeah, they're not getting aggressive in any sort of way, you know. They're probably adjusting some protection, stuff like that. We're gonna see come next week, Tuesday. We should see some of the more real action come back. I was hoping, T, that we get some action in individual names, even under the hood type names. You know, they usually run those during this week. But we didn't get any of that, right? Not much of that at all. Not much at all. But yeah, it was a good example anyway today of, in this environment where I'm paying attention to financial conditions and credit spreads, of how I use it. Okay, it's not gospel to me. So in other words, you know, I'm not trading every tick on here. I'm looking for that type of setup, just that type of setup where that divergence, where it's loosening, and the market hasn't followed yet. You know, and if there's flow, I really, you know, I take a liking to it. If I don't see flow like today, I'll be honest with you, I didn't catch any of the afternoon rally, which is kind of sad because that was the best part of it. I caught a little piece early on for a little trade. So in other words, this into the bell, I didn't catch any of this. None of that. You know, I got in the middle of this a little bit. So because of the flow. Otherwise, I probably would have had some decent weight on to catch a little of it later on. Yeah, and you know, I mean, I don't know anybody with you gotta listen, shorting now here, you gotta be careful here. No, I mean, you gotta be careful here now. Shorting into a downside niner here, like your risk reward is not too juicy. You know, you want to see, if you want a new short, you kind of want to see a little lift here to that, you know? Or if there's no lift, if you're looking for a short, you kind of want to see this setup again where it fails. But we should, without any, again, major news, and I'm talking about major news, we should see some stability like this here. Not for too long, but we should see a little stability here. And we'll see what that leads to. Again, if, like T's saying, maybe Tuesday, the flow looks a lot different, and maybe we can get a little lift here. You know what I mean? Maybe we could get a little lift here. It's certainly possible. Right? If we see some bullish activity, even if it's spec action, as long as there's aggressive buying, there's a pace to it, we could easily see, at the least, even something like this, you know, where you get a rally to, what is that? 40, yeah, 40, 50, 40, 80, you know? IQD after hours. Where's who in the room was giving us the updates on spreads? What they close at? Is he on here? Forgot who it was again. What did you say? This, let's see the daily on this. Yeah, so you might see something similar like what I'm talking about here, right? Yeah, you might see something like that. And if it does that, you know, there'll be some stabilization in the on the index level as well. What's the other one doing? I don't follow it as closely. Pretty similar. Oh, this one had a, this is the other one to look at if you want to look at HYG IEF. They're similar. I follow this one more. The other thing to look at, guys, not again, not at all times, but stuff you want to pay attention to, off sell-offs, or if a rally is any real, is just simply these ETFs. Like, look how disgusting this looks. That, I mean, wow, that's a nice little turnaround there. But here's the LQD chart. Wow, I didn't realize that got to lows today. How didn't I realize that? Holy shit. Did you guys notice that? By the way, guys, you realize what we haven't mentioned at all yet today? And I honestly, I'm being dead straight. I have no idea what happens with it. QT, you know? Like, we're all concerned about whether the Fed's done raising, you know, are they going to pause? Are they going to do this? Are they going to do that? Meanwhile, the most aggressive quantitative tightening that we ever seen in our life is going on, and nobody has a clue what kind of effect that's going to play. I know it's scary, T. You know, it's scary. And again, we may not see it initially, like in the equity market having an effect. You know what I mean? It's not going to be there. It's going to be the bond market. Yep, that could be part of their game, right? Talking so much. And you know what's, you find this strange, T? Jackson Hole, you realize he didn't mention those two letters once, QT, in the whole speech? Not once. Isn't that a little strange? You're better off. He didn't mention those two letters once. Pretty crazy. Yeah, you're probably right. He's trying to sneak it in. But you see this this stuff here, like, again, healthy bull markets, usually these lead initially. Like, let me see, hold on. Let me see, again, the COVID is a bad example because it wasn't really a bear market, but you know, you usually see these things lead out and hold, you know? And you start to notice around that more constructive things in equities, you know? Now, don't forget, or for COVID, they rigged this. Remember, they were actually buying HYG. Right? This was the one they rigged, if I'm not mistaken. Because look at what happened here. Oh, look at this. You know, so the rally, like, look at the difference here. Oh, J&K, that's right, Jim, that's the other one. So, you know what I mean? Like, this was a good signal that even, you know, even if the indexes weren't going to rip higher, that there'd be some healthy action under the hood. You know, again, at least initially, you don't want to stare at these things we're in a bull market, even though these are always an early sign. I'll give an example. Where's this COVID? Look at this. Wow. You know, but think about how many people were still calling for Armageddon, well, after this happened, you know? And these were telling you a whole different thing. Now look at this. Okay, these are always an early sign. Look, okay. So now you get into bull mode. These things go quiet. Nobody pays attention to them when you're in a bull market, okay? But what has a tendency to happen is you start to notice this early. You see that downtrend? And you know where that showed up? October of last year. The equity indexes didn't roll over till January. So these things started to roll over in October, and clear cut downtrend, right? I mean, you don't even need to be a chartist to see that, right? And then January just spit up. Yeah, Eric, they rigged it. They rigged it. That's how they rigged the game then, right? That's where the problems were. And they said, you know what? We're just going to go in and buy HYG. So they rigged it. Yep. Exactly. J&K's junk bonds, yeah. So the three, well, here is high yield, HYG, J&K's junk bonds, and LQD, that's corporate bonds. You know, but they all did the same thing. They all did the same thing. Right? So this was, oh, here. Where the hell am I? Oh. That's where we are now. Damn. I didn't realize that came in that much. That looks like shit. Oh, this rolled over. This started a downtrend even earlier, the start of 2021 corporate bonds. But they're usually an early sign, an early indicator, you know, an early indicator. So we'll see this, what to watch here, watch to see if they hold these lows. I didn't realize they got down that low already. The boys met with the Fed in March 2020. They said HY crazy, right? Yeah, because they used to joke around, all the conspiracy theorists here, Ashley, they used to say, you know, oh, watch, the Fed's gonna buy ETFs soon. You know, like not even meaning what they say, like kind of like Japan, the Bank of Japan does. They literally buy the ETF there. That's funny. So again, we're in this type of climate, you know, it's, you lose track of them. It's good to have them on the screen. You know, you should have these things on the screen just to take a peek at what they're doing. And like today, they, again, with the stuff we look at, these were a nice tell. Like if you look, I was showing, if you guys were around today, I was flashing this chart this afternoon, because look at what this was doing from a little after 10:30. You understand? So this kind of was an early tell that that low was legit in the equity market. Yeah, they're down there again. It's nuts. It's nuts. But if you think about it, you know, that's why a lot of people were really concerned about the bond market with the QT. They think it's the bond market that is the big concern. You know, because they got to unravel all that shit. I mean, but I honestly, I'm not even going to pretend to know what goes on with QT. Because again, I don't think anybody knows. I'm being dead straight with you. I don't think anybody has a clue. But you know, we'll see. You know what kind of effect it has. A long-term HYG looks good. What are you looking at, monthly or something like that, or even longer than that? Wow, it's back down to these levels again, huh? Crazy. Monthly niner, good call. Nuts. Good call. So it might hold these lows for a bit, right? Maybe it holds these lows for a little bit. Looks like it's been holding in here. The daily, what do you get? Let me see something here. You know what else was interesting too, guys? I noticed, again, more short term than anything else. You have a downside niner on the indexes, and you had an upside niner here in VIX too. You know? Yeah, again, even, you know, how big of a squeeze, who the hell knows, but at least some stability, right? Like, for example, tomorrow, we didn't talk about it. Tomorrow you got the job number, right? It's pretty cut and dry. Strong job number, you're going to get futures get hit pre-market. But they may be, they could be viable for a squeeze. So that's the game plan for tomorrow. Okay. Yeah, home builders, right? Sure, they're getting hit over the head again. Let me see. Was it XHB, that ETF? And the IYR, right? Yeah, they still, they still look okay if they can hold up here, but they're all still in just, clear-cut downtrends, man. I don't know what that was. I don't know how clean it was either. You had a couple of weird September orders today. How about, did you see there was an Apple order? Did that hit the board? I saw that Apple order. There was an Apple in the money call buyer, like a couple million for September. Even looked like Apple, somebody sold puts in September. I don't know how clean any of that action. What I didn't like about the Rivian action was that implied vol. There was a couple of the trades there, and implied vol went down, and it might be moving. Here's where we are again. We're pretty much back where we. These are the Goldman indicators. All right, so this is the last guy here, the final chapter, and this is global. Won't budge is right. Look at it. All the diamonds are stacked up there for 1 month, 3 months. Eric, mark my words, Eric, listen to me, okay? And remember I said this. When the unemployment rate ticks higher, watch how these fund flows start to unravel. Watch. Yeah, this is a lot of park money. This is not trader money. This is money you try to get through this stuff. Exactly. Yeah. So think about it. They always want to just sit through the storm, wait it out. That's why when they spit up, that's real capitulation, right? When you get the people who think, don't worry about it, all you got to do is hold. When they give up, that's real capitulation. That's real capitulation. You understand? But think about this, Eric, right? And we spoke about it, but this is what boggles my mind even more. This doesn't surprise me as much, okay? What surprises me even more is when they decided to come in, okay? That's what boggles my mind all the time. Oh no, I gotta do fun for, hold on. Hopefully I can find this. Of course not. Of course not. Oh, here we go. Where's that one chart I'm looking for? That's the goal. This Twitter search is a debacle. Well, you can see it here, though. You can see it. Okay, this is not bad. All right. So here, Eric, August of 2021. Okay. So think about what was transpiring in the market from the COVID lows all the way to August 2021. Okay. And that's where they started. Okay. They literally was. Okay. They were even putting more money in as the market started to roll over. You understand? So the US is the dark blue line here. Now look at Europe. Okay. And believe it or not, prior to this here, even with the markets rallying, you didn't see anything like this the last few years. You saw more of this purple line, light purple, similar to that. So it's not like they came in and got out and came back in. They didn't believe in any of this bull market even before COVID. What happened August 2021? I don't know. Who the hell knows what goes through their mind? Who knows? But that's why, and Hartnett was talking about it too. When they start losing jobs, you're going to start to see this thing crumble. It's going to look like ARC, right? And I'm telling you, we've seen it before. I wish I had a chart that goes back and you could see it all. Yeah. Listen, Praveen, that's Powell's mission. You understand? He's got to do it. He's got to do it. He's got to do it. It's not just about inflation. It's about speculation. It's about the job market itself. He's got to cool things down. He has to. He has to. He can't stop now. He just can't do it. You understand? The only thing that would make him stop is something systemic, something breaks, because what happens, it'll accelerate this whole process. Wage growth, exactly. Yeah. Exactly. I mean, that's probably the bigger reason for it, the bigger concern. So once you see the job market get a little, again, the job market's been stellar for the most part, and that's why this thing has been like a rock, but it could take time, guys. It could take time, but again, the final chapter before a new bull market starts, okay, is usually these guys come out and they don't get back in for a long time. For a long time. There's no way to tell how long this freaking will take. That's the problem. And again, it doesn't necessarily, it usually does, but it doesn't mean that the market has to be at a lot lower levels, you know what I mean, than here. Could be just range bound in the process. Again, maybe I got high hopes, but you know what I'm saying? It doesn't mean that shit has to blow up and that gets them to sell, even though a lot of times that's, based on the Fed's track record. That's what happens. What do you want me to tell you? The Fed's got a pretty lousy track record when it comes to this stuff. It's not easy to do. I mean, let's be honest, right? It's not like they have an easy job. It's not easy to do. What do you think? They got a remote control? They're fooling around with the largest economy in the world here. Heat it up, cool it off, heat it up, cool it off. Where is Yellen? I don't even know. Is Yellen around still? I haven't seen Yellen in ages. Yeah, it's their job, I know. Listen, I don't feel bad for him, but it's a tough. Is she in hiding? I don't know. Honestly, I haven't seen her in a while. Usually, she might be already in her bunker. I wouldn't be surprised one bit. I wouldn't be surprised. So I think we covered. Anybody have any, before we get into other stuff you may have in your mind? Anybody have any questions on any of this stuff, positioning wise or anything like that? All right, so before, again, we'll talk about names and stuff if you want, but tomorrow, again, for me, right, on a tactical basis, the pretty simple game plan. Hot number, job number, strong job number. I'd be shocked you don't see some decent selling. And then if we do get that, keep an eye on conditions, and God forbid we could see some decent flow into it, and it'd be an ideal setup. But if we're not seeing flow and you want to be aggressive anyhow into weakness, I can't blame you. I mean, these are the opportunities right now. Keep an eye on this here. Keep an eye on this. It could be an early tell. It could be an early tell. Well, let me see the exacts here. What time did this turn? Around 11 o'clock, right? And you got the turn here. And it was pretty clean cut uptrend from there. Let me see. Hold on. I'm just curious the timing here. Okay, so look. Okay. And this is honestly, this is ideal. Whether it works out or not, this is ideal. Okay. You had conditions start to loosen into these lows. Okay. You had that divergence. You don't have to jump the gun. You don't have to, as soon as you see conditions kick up, start to loosen that, boom, you get in. Okay. Because what's even better, what you would like to see is the market do this and conditions continue to loosen. That's the strongest signal. You understand? And at the least, okay, so you know if you're wrong or not, at the least, exactly, divergence, at the least, the market should hold. You understand? In other words, don't, if you see the market just start selling aggressively, don't hold all the way down. You know what I mean? That's shouldn't happen. At the least, this should happen. Okay. And I'm making the point that you a lot of times you don't have to be quick. You know, you want it to, like, it's almost like you want it to be a little more obvious, right? So, like, I give an example, right? This was the low, okay, and right, like here, it's pretty obvious. There's a divergence there, right? Compared to the ES chart. Here's the ES chart. What the hell? Okay, so at this point here, oh my God, I drew all over this thing. At this point right here, it was pretty obvious that there was a divergence. And it allowed, and that's where I played. So you know what I mean? I caught this piece and I spit on the rest because the flow was awful and I really had no confidence in it. Oh, this? What? Strong? Oh, this? That's an indicator on here. That strong low, it should be. That's a low, should I think this is I don't want to get in trouble. I think you got to pay for this one. Let me put it that way, Ashley. It's not free. Yeah, just because you have to pay for it's not the good stuff. Trust me. There's a lot of shit you have to pay for that's boots. So anybody have any questions before we start talking about whatever's on your mind here? I got time. I got nothing to do today. I had a pretty crazy week. Tomorrow, by the way, for members, I'm gonna be out probably the last hour of the day. So if I can, what I'll do is I'll post Sharpies when I see them. Usually they don't update anyway, but I'll post them when I see them at the close as soon as I can. Yeah, I could definitely leave the broadcast on. Yep, definitely. Oh yeah, you guys could hear the thing too off the squawk. Okay, perfect. Hopefully I don't lose any signal and it knocks the squawk off. That's the only thing. But I'll leave it on. Top bets. I was in the middle this afternoon. I put a couple names on there because honestly I didn't see anything I liked. There were a couple orders that I wanted to put on there that I'm going to keep an eye for further action. You had a half decent order in American Express. What was it? November 155s. You know, see, these things aren't a bad setup here. You know what I mean? If we can later, Ashley, if we could see some decent flow, this is ideal. Now, I want to make it clear. I said this back in, what was it? What was the last bear market rally? What month was that? I keep forgetting. Hold on. Was that the beginning of the summer? Oh, spring. Oh my God, that long ago? Time flies, huh? Holy cow. So just for the record, I said the same thing here. You know, it was a really nice setup. Really nice setup here for buying to come in. Same thing here. You know, we could get a little bit of a W type thing. So we'll see. Again, I'm not even saying big picture to lead to a new bull market. I'm just talking about in general. This could be a nice spot if we see some flow where we can get a nice, a handful of trades. Maybe, what would be great? I know I'm jumping around here. Oh, think about this. It's September. What's everybody talking about right now? What's everybody and their mother talking about right now? How September is a disaster, right? How it's the worst month in the world. Now, you know me, I agree with that, but they kind of front ran it here a little bit. You understand? So if you don't get any contagion, they can catch some shorties here, They could catch some shorties here for a little bit. So the setup is there. The setup is there for a little window, but yeah, what happens is, again, seasonality. September's usually the disaster of disasters, a bad month, okay? And when it's a bad month, mid-October, right, to the end of October, they're usually bear killers. Everyone gets bared up, everyone capitulates, and you get monster rallies when that happens. When Septembers are horrible, right? Then you get the bottom in like late October-ish, and then you get that Santa rally, the Christmas rally. So, but the point I'm making here, okay, is I'm talking more short term here, that everybody is aware of the bad September. They kind of front ran it, and they can get squeezed here a bit. Yeah, we want it, Andrew. We need it. We want it. I don't know if we're going to get it. I don't know if we're going to get it. I'm still in the camp, right, for this to break right now, okay, and to accelerate to the downside. You need something to bust out there. I don't think you have enough selling without something breaking to get that type of what we want, the capitulation. Because keep in mind, you got hedge funds short, CTAs are short. You know what I mean? They're short already. You understand? They're short already. So what's likely to happen, to my point, what I'm saying is, if you do get some selling, you're going to get, like we're seeing already with hedge funds, you're going to see covering. You understand? Into weakness. Example, tomorrow, strong job number. Okay? The market sells off. Hedge funds are going to probably cover into the weakness and look to re-short on a rebound. Yeah. You can get some vicious squeezes with them short like this. You understand? And it doesn't take much. It doesn't take much. What the problem is now twofold. What we usually like to see, and they're in normal markets, okay, we like to see the hedge funds and CTAs flip from short, heavy short, to decent long exposure. You understand? The problem is because the macro backdrop with the Fed and everything else, you're not going to get them chasing like they normally would on the long side. They'll aggressively cover shorts, but to get them to chase and increase long positions, they won't do it in this macro backdrop. They won't do it. You know, they won't get that FOMO. Yeah, it could. It definitely could, X. It wouldn't surprise me. You know, wouldn't surprise me. Again, I think this helps that you know, you got a decent little downdraft here, guys, already in a short amount of time. No, I mean, this is not bad. Yeah. You know, this is a nice downdraft. So very possible, you know, even at the least get something, you know, some sort of rally back to what was that? Yeah, 4,100-ish around here, 4,150. Where are we? 40, 50, 100 points. That's not much. But yeah, I agree with you guys. A lot of people would like a test of the lows. You know, there's so many balls in the air. You know, listen, tell me what financial conditions are gonna look like, and credit scores are gonna look like, and then I can, you know, I can feel good about a prediction. How can I predict without that? You know, I can't. It's just impossible. All right. Like, for example, back here, this was the problem back here. Okay. You were to tell me that the Fed was going to allow this, like the Fed wasn't going to aggressively tighten financial conditions and run their mouth like Powell did, and the markets react like that, this whole rally. Like, you're talking about the most aggressive ease of financial conditions in the past decade came at a time where the Fed needs to do the total opposite. How do you foresee that? You know, they're not supposed to allow that to happen. By the way, did you hear cash carry? I've never heard anything like that out of the Fed. I can't believe, like, it sounded weird to me. It didn't sound weird to you guys? Yeah, he said no. He said he was happy. He's happy that the markets have sold off. He was pissed off that they rallied the way they did. You know, it sounded weird coming from the Fed. You know, usually they usually this is why, okay? Usually they say, oh, the equity markets, we watch them, but we don't watch them too closely. They go up, they go down. Oh, it was? I didn't see that, Tenor. See? That was a misquote. Get the hell out of here. What'd he say? Or is he bullshitting? Because I'm telling you, I can't believe when I heard that, I couldn't believe it. Let me see this. That's so funny that a misquote. Oh, yeah. Here's my actual quote. I was actually happy to see how Powell's Jackson Hole speech was received. People now understand the seriousness of our commitment to getting inflation back to 2%. As I have said, the signal to noise ratio on Twitter. I am delighted by the market's reaction. I am delighted. Let me see. Yeah, he's backtracking. Twitter. Holy Christ, this Twitter is going to get everybody killed. And you know what's nuts? Hash carry, you're talking about like the biggest dove ever created. Like, this is, those of you who were around 2008, you know, like, he was the big one pushing Bernanke. You know, Bernanke was the stubborn one. And not only that, to keep QE for as long as they did, you know what I mean? He wanted it But he always said, unless there's a threat of inflation, there's no reason to be hawkish. You understand? If you see inflation, you got to change your tune. So to his credit, he did exactly that. That's the only thing I could give him credit for. But they're so involved. They're so involved. You guys don't remember the Greenspan days. Even Bernanke, you couldn't get them to say things if you had them at gunpoint, these guys, when it came to the market. They would never talk about the market. These guys now talk about it every day. Every day. You know who set the trend? The Trump administration. You know, these people never spoke about equities. Yeah. Trump, right? He started it all. You know, like Greenspan, Greenspan used to come, they used to look at his suitcase, the way he was holding his suitcase. Was it heavy? Was he holding it? Did it look like it was heavy? If it was heavy, then that means he's raising rates. They used to look at Greenspan's suitcase. Even when Greenspan spoke, you still couldn't understand him. How about that? He confused you even more. Yep, so dependent on the Fed now. But I kid you not, guys. If you guys are young, go on YouTube and go pull up a Greenspan speech. Please do me a favor. Please smoke a doob or something before you do it too, because you'll bug out. This guy, okay. If you were confused before he spoke, your head was spinning after his speech, okay. And you know what's? Those were the only two, I was just gonna say, Ronchero, those are the only two words in this whole term that anybody understood what the hell that they remembered him by. Irrational exuberance. That's it. That's it. And you know what's funny? Like back then, right, in the market, you used to have Greenspan on the TV when he was there, and you used to mute it. Nobody used to even listen. Okay, now Powell talks, everybody's ears are, you know what I mean? Everybody stops what they're doing. Back then, the TV was muted when Greenspan was on because you couldn't even figure out what the hell he was saying, even if you were listening. PB, honestly, I at times I thought he may have been talking a different language. Like maybe he was speaking Yiddish or something. I thought it was like, all kidding aside, I thought he was fucking with us at times. Yeah, he's, now these guys, I mean, like this guy Bostic, this guy talks every day. He speaks every day, this guy Bostic. You know what I mean? They talk every single day. How many times do they got to talk, these guys, a week? Greenspan, his facial expressions. Oh, when I first got on Twitter, my avatar was just pictures of Greenspan for like the first couple of years. He's got the classic facial expressions. Oh my God. He's a funny looking character, that Greenspan. Oh, but I'm telling you, he was classic. He was classic. And then like Bernanke was the Mac Daddy, Like you could understand what the hell he was saying. But even, he was discreet. Poker. Jesus. And now these guys just run their mouth 24/7. How the hell did I get into Greenspan? I was talking some of the bets today. So American Express, you got November 155 calls that saw some play. So, look at a decent setup if it catches more action. A couple of retail names caught some action. The old Coach, TPR. A lot of Niners. Look, a lot of Niners. A lot of Niners. TPR, the other one is Capri. Similar setup. So, these aren't, again, honestly, I'm going to put them out on the top bet list. It wasn't any crazy action. Nothing out there got me excited. American Express was a decent bet. It was like a $500,000. What else? Any names you guys happen to see? Lulu? Oh, earnings. Yeah. Lulu. Oh, $27. Look at this Lulu. What a beast this was. Let me put this chart's a little noisy. Let me get the other chart up here. Lulu, skip to my Lou. Yeah, I saw ARC outflow. I'll tell you, there was some big ARC puts into the rally here. October puts, they bombed them. Oh, no niner on ARC. How's that possible? So I mentioned to you about the Apple flow. Let me show you guys what I'm talking about. Now, if this was further out in time, I'd be a lot more interested, even though, you know, Apple, you got to see more than just an order. But look at this stuff here. Let me take a screenshot of it. These big names, the flow is so noisy and messy every day because of how overowned they are. It's almost impossible to get a clean read on these things. Oh, maybe they're playing around that event. So, I mean, it's bullish action. Look at it here. Hold on. So this guy's a put seller. Now, it could be closing a position, very possible. I'll take a peek at open interest tomorrow to see if it sticks. But they sell the September 150 puts. Look at that. That's big time money right there. Okay. And this was in the afternoon, about an hour after this bet. And this bet, right, similar size contract. So it may be coming from the same outfit there. September, so front month, 152.5 calls for 8 million. Yeah, I don't know. That's what I mean. Like, what is this? That big wood like that for such short time? Like, yeah. But the point I'm trying to make is it's not a bet on Apple. You understand? It's a trade when it's that short term. These are sold, but it could be they closed a position. You understand? So, but you guys see all the orders in this name. That's what I'm saying. When you see just one order like this, it's hard to trust. You know, if we saw multiple sweeps, like remember we saw the October call buyer come into the lows before the rally. You guys remember that big size October call sweeper who kept buying and buying? You guys probably remember it. In Apple. You know, then you could have more confidence that it's legitimate buying coming in. You know what I mean? When it's 170, something like that. When it's one order, you know, like this, you know, you got to look at open interest, it changes tomorrow. It's so difficult. Like, look at how many, you know, how many orders like this in Apple? Look at this. This is, oh, these are tied and a cross and tied. There's so much junk in Apple. Later, Bill. This is part of a spread. Oh, this is probably an adjustment. Yeah, so much. Look at it. There's a mess. This is nothing. This is just a couple orders in Apple. But this is what caught my eye. These are big trades here. I don't know what the hell they're doing here. Like still saying, maybe he just wrote out, maybe he's writing out today. Maybe he's not even there tomorrow. Oh, there were 165s, Matt? 165, the October. And if I remember correctly, there was like a multiple days of that action, right, Matt? Wasn't there like, yeah, they went on for days. So even if like you didn't believe the first day of action, you know, listen, it was legitimate buying, whatever, you know. This, I really, I don't know, guys. I don't know. Yep. You know, I really don't know. I'll check open interest. Maybe I can get a better look at it through the OI changes tomorrow, and I'll let you guys know. So that was the order there. Apple. What else did I want to tell you guys about? NAII came out today. Nice dip down here. That's kind of the AAII survey version of the professional side. But again, the pros have been more bearish than the investor side for a while now. What else? Anybody else? Any action or anything? Oh, here are the SPY puts that have been coming in. Big size. There was some IWM puts too, but they rolled. Oh, there's gonna be so many. Anyway, let me see if I can find the yesterday's October dudes. Oh, here they are. It should be coming up here. Oh, I think it was yesterday. Like, you know, look at the action daily in SPY. Like, how the hell you? I thought I'd find them easier, but oh, here they are. Here, this guy. Look at this guy. Oh, there you go. Matt found them quicker than me. Oh, is this today? Oh, this is the one today. This is not the guy I'm looking for. But these were big today too. These were big today too. Maybe it was the day before, Matt? Was it yesterday? Maybe the day before. No, August 31. Here, I wrote it in my comments. Should be right over here. Let me see. Yeah? Oh, there, Matt found them there. 380. That's them. Right? I think that's them. Tuesday. Okay. So it was 2 days ago. Yeah, here they are. You're right. Good call, Phil. I would have been looking for days. Oof. Oof. Yeah, the oof sweep. Oh, so it's 2 days ago. All right. 2 days. Yeah, big. Somebody talk about First Solar. First Solar has seen some call flow, but that move, it had a crazy move. So now you're getting. I thought it was taking a breather. This thing didn't even breathe yet. What a beast! Damn, I like First Solar. I can't like it here. You know, if you get a little breather in it, see what it looks like off a breather. What was the other names, Ed, you're talking about? Cybersecurity? They always, for the most part, cybersecurity names see bull flow. Nothing off the top of my head. Oh, you know what I remember? Crowd Leaps was some of the recent. Crowd Leaps they bought. Yeah, I don't know what you're going to do with that. No, I haven't seen any action in this. Somebody asked about this recently. Yeah, you might get a bounce here, like a lot of these names, Niners. You could get a bounce here. This is cybersecurity, Ed? Bill Miller? Really? I thought this was something else this year. Ah, okay. So that means they're probably losing, let me guess, $2 a share. Oh, no, not that bad. Yeah, chips. I mean, chips are tough. They're tough. You know, they're tough. see how they react. We're going to see more of what we saw where the fundamentals of these things, they're going to take hits. There's going to be negative news. They're going to take hits. So I think if you want to buy these things, you got to look to buy them off that. You don't want to buy them ahead of that. Like look at like a Micron. Have a good night, Eric. Like this already has taken a couple hits, but fundamentals are against you in these things. They're tough. Yeah, Nvidia now, right? Now, if anything, you look to buy it off this this selling, but I don't know, if the selling's completely done. I don't know, man. I do not know. The thing is you'll see flow in these things when they want them. Like you know what I mean? They bomb these things. They bomb these things. There hasn't been, there's been isolated call orders. There's actually been a lot of short-term puts in these things. GT had a little bit of flow, and then we saw some put action in it. We had some flow. We talked about it. We were going to keep an eye for any additional buying. And then recently we saw like some protection in it. Not much of any new buying in it. There's nothing catching flow right now. Nothing. The last round of buying that came into energy names. But again, we spoke about it recently. They ran already. Like that trade is done now. Now actually they're correcting. So, maybe we'll see some flow come into the pullbacks. But it's been, the same names, the same for the most part. Like this is a newish name, Vet, that they've been aggressive in. The driller, I keep forgetting the name, guys. What's the driller's name? Remember the driller? A new name? Oh, Jesus. Later, Jim. Enjoy your din-din. What's that oil driller again? Jesus Christ. That newer name, VAT? Is it VAT? No, something like that. Val, that's it. That's why I look familiar, Val. All right, so there was some unusual, like this is not a name we saw action in. So this is a newer name in the energy camp. CCJ I talked about, they bombed this. What else? Oh, a name that's pulling back that had a nice run that they bought, BTU. Remember they bombed this? But yeah, look, these names how many of these in a row did they have? So now you got a little bit of a breather here. See if they buy them again here. But as far as like the stuff you guys are asking about, they're not buying much of that aggressively. Pins, that's one name. There's been a little accumulation in November's. Guys, that's why I'm complaining about the flow. NCR, there's been some. There's chatter in that name. There's been I haven't seen any NCR recently though, right? Have you seen any NCR? I don't think so. But this would be a nice spot for NCR for them to come back again if you're interested. So if you see them come back again and you're interested, this is the spot, right? You don't want to buy Pink Panther. Let it come breathe a little. But they never come back. You know how many names that I was looking at that maybe they'd come back for off, caught one decent sweep and you hope it's not a short hedge or anything like that. They haven't come back in any of these names, in any of these growth groups, none. The best flow in these growth sectors and tech and all that has been, flow that's come into like off lows, and then you get a rally, a trade. That's it. But other accumulation, not much of it. Like we talked about the Apple, those October calls. Nothing new though, guys. Nothing new. We need new names bad. And I'm telling you, I know you're probably losing faith in me. I don't think it's going to be that much longer. I think this process has gone on, already a decent amount of time where we should be closer to stock picking, where they find individual names and they start accumulating. Just not happening, man. It's not happening. And, listen, that's a signal in itself. Like I told you guys earlier, that the health of these rallies aren't that great. They're just squeezes. They are data dependent. I love that phrase right now. Yeah, I know. Yeah, I don't know what the hell goes on. You need something, McElliott. You need still we need something to bust. And I don't know how we get that. I know. You don't know what's good anymore. Because we're at that spot where it's the truth though. Right? Like you're gonna start getting bad economic news. Is that good? I don't know. Maybe good initially, but I don't think it's gonna last that long that it's good, especially if you're not gonna get Fed cuts into it. Yeah, listen, it's been a tricky backdrop, right? We've spoke about it, and it remains tricky. You gotta try to trade through this, but take it easy because these aren't high confidence trades. These you're trying to make the best of it here. You're trying to make the best of it. The main goal is to not get buried because there are body bags being left all over the place, and it's probably going to get worse. No, you got to survive. You got to get through this somehow, some way, and you'll be rewarded. You know what I mean? For years, you'll be rewarded. But this is a process. It takes time. Takes time. CE, is that energy? I think we saw some action in this. Oh no, this is not it. CE, what is this? Chemicals. See, the problem with chemicals, Les, it's a cyclical group. Usually when you're getting rate cuts, they usually go to these things. Now it's the opposite of that. So kind of got headwinds here. Oh, all right. Well, there's a perfect rebuttal for everything I just said. You know what I mean? All right, all that doesn't matter. Buffett's trying to buy cheap. Buffett chatter. Interesting. Going after chemical names, right? There's another chemical name. I can't think. But yeah, the sector-wise, it's tough. WOK is that the name of it? It could be. Yeah, I think this is one of them. They used to have a list of these names when they got hot. You get Fed rate cuts, and these names will probably fly. They're usually the first stage of recovery. Then home builders, the home builders you guys looked at, right? They're holding up a little bit. They're holding up. FCX, that's a tricky one. That's a tricky one. Reason being, it's copper. So now you got commodity that Powell's looking to put the kibosh on, and economically sensitive. You don't buy copper ahead of a recession. So kind of got the worst of both worlds there. Yeah. There will be a time this thing will probably lead, Exactly. Lead us out. I don't know if we're there yet, though. I don't think we're there yet, though. And plus, what's going on in Europe, it may weigh on copper too. China, you got a lot of headwinds here, a lot of headwinds. Now the stock is off highs. It's not like you're buying new highs. What worries me is all this room here. Yeah, this is tough. It's tough. Really, the flow, there hasn't been really much to talk about in flow. This is a name that catches a lot of flow, a lot of action. So it's going to catch some action, but there hasn't been anything that really caught my eye, sweeper wise, in this. But again, that you could use that statement for almost a lot of these things. I told you the CCJ is the only one out of non-energy that they been buying aggressively recently. And uranium is like a different, right? Uranium's got a little bullish backdrop going on as compared to some of the other stuff out there and the metals and stuff. Oh, gotcha. So it's still later, PJ. So it's almost like thrown in the energy group in a sense, right? Right, because the nuke, I got you. I got you. Yep. So that's the name they've been really aggressive in. Later, Dan. But guys, listen. Everything I'm complaining about, right? And trust me, there's nothing more I would like to come on here with a bucket full of names and ideas, and even names we're not buying. We have so much to choose from. I would love to, I would love to do that, but I can't come on here and bullshit you guys and just rattle off names, and pretend like there's been buying them, because there's not. Biotech, we saw a little of spec action behind the highly shorted names early on, right? The NVTA, the other one, I don't even remember the symbol, CE, whatever. Bigger biotech, they used to be some decent size and like an ABBV and stuff like that. There's just nothing there either. Nothing there either. ABCL, that's biotech, ABCL. And listen, biotech, out of all the things out there, okay, because that's another problem for me. Nothing makes sense to me. Okay. I can't get excited about anything. The commodity side scares me because of what the Fed's doing. Growth scares me from what the Fed is doing. Like, it's not like there's no flow, and I'm bullish on the backdrop. I can't get excited about it personally. The only group that makes sense to me is healthcare and biotech. That's what makes sense to me here. So I would love to see some real action come into these things. I would love to see it, but we haven't seen it yet. Like biotech and healthcare are recession proof. A lot of times throughout my career, you would see buyers hide there for decent periods of time. Now, not speculative biotech, you know what I mean? Quality biotech. Not the more speculative FDA. Well, could be some of that, but you know what I mean. Yeah, that's what's the bullish part of it, the deals, right? The deals that are there. But flow, guys, nothing. Or you see some little cheap ones catching buyers that are maybe up for FDA approvals, shit like that. No accumulation at all, nothing. They used to bomb names like this, for the growthier side, SRPT, INSEE. Remember those days? Names like this, SGen. Like these names used to catch the best action. Aggressive action. I'm not seeing any of that. Any of it. So, but yeah, that group makes the most sense to me. That group makes most sense to me. Healthcare, biotech. What about healthcare? Like, I don't know, what's healthcare these days? Anybody look at this. See what I mean? This were a little bit of flow. SGen was a beast back then. Yep. See, like these groups, I think they make a lot of sense to me, these things. And even underbelly. Maybe we're seeing the underbelly, but I don't know why sweepers aren't buying these things. SGFI, that was chatter news, right? Or buyout news. Yep. Signify Health. CVS, how's she doing? Yeah, CVS makes sense, right? CVS is kind of recession proof. The dollar stores. What happened to this? Dollar Tree. EG. I don't know. Yeah, I can't just make up shit. You know what I mean? But healthcare biotech does make a lot of sense to me. Does make a lot of sense. But listen, moral of the story, okay? And again, hopefully you take something out of these webinars and you're gonna do what you gotta do anyway. But from what we look at every day on my end here, it's still, you know, not risk on, not risk on. The signals we look at are telling us to be nimble, right? Preserve capital, make sure you don't blow yourself up. Those are the most important things to pay attention to. They have been. We've been talking about it week in, week out, and they continue. It continues to be that way. Okay, there's going to be a point where it slowly changes, and we can start doing a little stock picking, because that's what we're going to be, you know, seeing from our signals. It's time to do some stock picking, but that time is not here yet. Again, outside of some energy and commodities, not here yet. Yeah, and listen, I hate to use the line. Sometimes it gets priced in, but right now there's still so much going on, so many balls in the air. They don't even know what to price in, I think, is the problem. You know, they don't even know what the hell to price in. Price in inflation, price in recession, price in QT, price in this, price in that. Price in a war. You got a lot going on. But the sun will come out again. Make sure you have some money for that time. All right? Yeah, come on. A lot of commodities have cooled off across the board. Like a lot of things have cooled off inflation-wise outside of rents and stuff like that. But, you know, it's probably still going to remain sticky. Probably going to remain sticky. Yeah. Tomorrow, let's see. Hot job number. We get some weakness. And then we got a couple things to eye for a squeeze. And we can try to make some money doing that. All right? Enjoy the rest of the night, guys. I'll see you guys mañana. Later, everybody.